Welcome to the Watercooler, another short one today. Let's talk about the AI and the bull market, what's going on. Right now, in terms of the cycle, we're in the peak of inflated expectations, and really everything's just tied to semiconductor advancement. This is all seen in the RAM prices, all seen in the computer prices. We can see it in the Steam Deck, we can see it in the changes in the AMD chip prices. Now it's like basically the same as Nvidia with seemingly little to no edge, and we have to acknowledge this. Semiconductor, whilst it's not AI, it is intrinsically tied to the AI belief, right? No one's really going around and saying, hey, the semiconductor prices are being driven by medical advancements or medical research or like biotech or anything like that. Everyone knows it is because of AI. So long as AI does well, semiconductor industry will also do well. But there are cracks showing, of course. We can see that. We can see that in Amazon's $250 billion debt. We can see that in the sentiment. There's, of course, growing doubts about AI. People are getting worried. What's happening to the investments that we've made? Are they going to be used? Are they not going to be used? Are they going to see the return on investment that people are expecting? Will AI continue to grow? There are questions about, did we even invest enough? We can see that through whether it's true or not, or whether it's artificial or not, people trying or fighting for capacity, such as contracts on capacity going to like SpaceX, for example, and many other places where we can see this. And of course, the last one is this even sustainable? Like things can't keep growing on forever. People want to see not only return, but they also want to see the AI thesis play out. If companies are being promised that they are going to see a 10x, 100x productivity, well, they would also expect to see a 10x, 100x reflected in their revenue growth or their profits or something along those lines, the metrics that shareholders actually care about, not just a slide on a slide deck. In terms of sentiment, it's definitely dropping. We can see this objectively. It's not just anecdotal evidence that is coming out. Perhaps one way is to look at the stocks, and there's a number of reasons why this is happening. Probably driven by algorithmic trading, and that's causing a lot of volatility simply because of the extreme velocity or volumes that are coming through. And yeah, also has this magnifying effect. It compounds the effects of things that are happening. When something drops, it just drops another section down. So what can we do to get through this if you're a trader or if you are in the markets? Well, the key thing is cash reserves, avoiding all in, just staying safe, doing your research, and having the correct risk profile that you have. There's no point going all in. That's all part of the game. So that's it for today. That's the Watercooler.